In this video, we're going to be talking about IBC, the infinite banking concept, the process versus the platform. Very quickly, we're going to see that the IBC process is about becoming your own banker. That's why it's called the infinite banking concept, and that's why Nelson Nash's famous book is titled Becoming Your Own Banker. So that's what the process of IBC is. But then the platform is going to be dividend-paying whole life insurance. And so that's why when you read discussions about IBC, it'll seem that sometimes people are talking about banking, but other times people are talking about life insurance. You might be getting confused. So again, the big picture is the process of IBC is how you, either in your capacity as a household or as a business owner, can become your own banker, set up your own bank, as it were. That's the process. But then the specific platform through which you implement IBC, as we're going to find out as these video lectures continue, is dividend-paying whole life insurance. So looking at Nelson's book, let me speak to the process, the big picture. So this comes right from page 3, the introduction to the 5th edition, where Nelson writes, "The whole idea is to recapture the interest that one is paying to banks and finance companies for the major items that we need during a lifetime, such as automobiles, major appliances, education, homes, investment opportunities, business equipment, etc. This book is not about investments of any kind. It is about how one finances the things of life, which can certainly include investments." Okay, so right there, Nelson crystallizes the whole process of IBC. He's telling you what IBC is about. It's becoming your own banker. So the idea is, right now, the typical American is caught in this trap where he earns income, he saves a tiny little fraction of it, but what do the gurus tell him to do with that savings? They tell him, oh, go put it in your 401k or other tax-qualified investments where it's effectively in prison. Forget about it. Pretend you don't even have that. You're not allowed to touch that money, at least not without incurring huge penalties from the government. And then, when you realize you don't have enough to live on, you need to buy a new car, you need to send your kid to college, you want to buy a house, pay for your daughter's wedding, what do? Well, you don't have any savings because you've put it in prison. So you have to go hat in hand to other lenders, commercial banks or finance companies, so forth. And so Nelson's telling you to stop, wait a minute, step back and look at the big picture. You are taking your savings, giving it to others so they control it, and then in order to finance your lifestyle, you then have to go to these same outsiders and borrow money back. And he's saying, why don't you cut out the middleman? Instead of doing that, why don't you set up your own bank? And I'm putting it in quotation marks because we're not speaking of a legal bank here. We're talking about economically how it functions, this institution. He's saying set up your own bank so that now you take your savings, you put it in this new spot, and so then when you need to borrow money, you're effectively borrowing from yourself rather than borrowing from outsiders. So there's benefits of that. One, of course, is that you have control. If you are effectively borrowing from yourself, and in future videos we're going to walk through more carefully what do we mean by that, but if you're effectively borrowing from yourself, you're ultimately in control. If you fall behind on your planned repayment schedule, no outsider's going to come and repo your property, because you are the outside lender. You're just borrowing it from your own bank, as it were. All right, so there's a lot of peace of mind there to have that control to be able to set the terms of the loan repayment on your own terms. The other element is, if you go and look at the numbers, it often happens that the interest rate charged on a loan is going to be lower if you're borrowing it through the mechanisms that Nelson specifies. And so this allows you, if you're paying back on the same schedule that you would have used with an outside lender, if you're effectively borrowing it from yourself at a better interest rate, this means with the same out-of-pocket cash flows, you end up accumulating more wealth over time. Okay, so that is, in a nutshell, the process of IBC, becoming your own banker. We're not talking about investing in a particular type of asset. We're just talking about a way to structure your finances to wean yourself off of dependence on outside lenders, to become your own banker. Now, what is the specific platform through which you implement IBC? Well, after surveying the landscape, Nelson Nash concluded that there's this financial product that's been around for a long time. It's very conservative. It's downright boring. That's why the gurus don't like it, because it's not sexy enough, it's not interesting, there's nothing special or new about it. It's been sitting there forever. What is it? It's dividend-paying whole life insurance. And Nelson Nash discovered a way to use the features that have been in this product for a while that you can effectively create your own bank, as it were. It's an excellent place for you to store your savings and then be able to tap them when you need to finance life's expenditures. So that's why when you start getting into discussions of IBC, you need to understand how does whole life work, because that's the particular mechanism through which you implement IBC. That's the platform through which you implement IBC. But IBC per se is not about life insurance. IBC is not telling you, oh, go invest in life insurance because that's a good investment compared to other things. Strictly speaking, that's not what IBC is. IBC is a process about becoming your own banker, and it just so happens when we consider all the alternatives that dividend-paying whole life insurance is an excellent platform through which to implement it.